Welcome to the case study series in business ethics by Skilled MBA. McDonald's expansion in China presents a compelling example of global growth intersecting with ethical complexity. As the fast food giant seeks to strengthen its presence in one of the world's most dynamic markets, it must navigate challenges such as cultural adaptation, fair labor practices, and environmental sustainability. This case explores how McDonald's balances profit-driven strategies with its corporate social responsibilities, highlighting the importance of ethical leadership in international business operations. McDonald's aims to establish 50,000 global restaurants by 2027, with 7,000 new outlets in China alone. This aggressive expansion highlights the company's strategic focus on the Chinese market, marking one of its most ambitious growth plans. The initiative underscores McDonald's commitment to capturing the burgeoning demand for Western fast food in China. China's massive urban population and rising middle class present a unique market opportunity for McDonald's. The growing appetite for Western fast food, coupled with an existing joint venture presence, positions McDonald's to capitalize on China's unparalleled fast food market growth. Economic expansion creates millions of new consumers annually, enabling McDonald's to scale rapidly in this dynamic environment. Geopolitical tensions between China and Taiwan pose substantial business risks, potentially impacting operations. Western scrutiny intensifies with consumer activism and government oversight, demanding careful navigation. Balancing global brand integrity with local market needs is crucial, as reputation management becomes more challenging in this complex environment. Tier 1 cities like Shanghai and Beijing face saturation and high real estate costs. Tier 2 cities offer a growing middle class and less competition, but infrastructure varies. Tier 3 cities present untapped potential, yet infrastructure challenges could raise operational costs. Each tier demands tailored strategies for successful expansion. McDonald's navigates a competitive landscape with Kentucky Fried Chicken as the market leader. Local chains like Dicos, Hualaishi, and Real Kung Fu also pose significant challenges. Each competitor offers unique value propositions, requiring McDonald's to innovate and adapt its strategies to maintain and grow its market share. CEO Chris Kempczynski faces a complex decision matrix. Growth imperatives include meeting shareholder expectations, achieving market share goals, and hitting revenue targets while maintaining competitive positioning. Ethical considerations involve safeguarding brand reputation, adhering to human rights standards, implementing sustainable environmental practices, and ensuring political neutrality. Balancing short-term growth with long-term brand integrity is crucial. Political risk, with a 68% likelihood, is the most significant threat, potentially impacting operations amid United States-China tensions. Brand risk follows at 54%, with possible consumer backlash in Western markets. Market risk stands at 45%, indicating challenges in meeting growth targets due to competition. These factors highlight the need for strategic risk management in expansion plans. Geopolitical dynamics significantly influence corporate expansion strategies. Multinational corporations must navigate ethical leadership challenges in politically sensitive regions. Developing robust decision-making frameworks is crucial for managing high-stakes scenarios in complex markets. Understanding these intersections is vital for strategic planning and risk management. Aggressive expansion involves pursuing growth targets aggressively, prioritizing market share despite risks. Measured growth focuses on selective expansion in stable regions, balancing risk. A strategic pause suggests slowing expansion to focus on current operations until geopolitical tensions ease. Each approach impacts stakeholders and brand reputation differently. Legal compliance requires adherence to laws in both home and host countries. Ethical standards demand consistent global operations and supplier practices. Corporate responsibility involves considering impacts on stakeholders, including local communities. Strategic integrity ensures business decisions align with corporate values and mission, maintaining ethical coherence across all actions. Consider the leadership perspective. If you were Chief Executive Officer Chris Kempczynski, how would you navigate ethical boundaries while pursuing growth in conflict regions? Can business growth coexist with responsible leadership? Evaluate whose interests should take precedence in decision-making, balancing stakeholder priorities effectively. Identify the core ethical and strategic challenges, mapping all affected stakeholders and their interests. Evaluate alternative approaches and their consequences. Propose a balanced solution with a clear implementation plan. Prepare contingencies for likely obstacles and reactions, ensuring a comprehensive strategy that aligns with ethical standards and strategic goals. Multinational expansion requires navigating geopolitical realities, balancing growth with ethical standards, and managing reputational risks. Strategic thinking prioritizes long-term brand integrity over short-term gains. These challenges test corporate leadership, revealing their true character and values. Understanding these dynamics is crucial for making informed decisions in global markets. The McDonald's expansion into the Chinese market, authored by Fabrizio Di Muro, highlights the intricate balance between growth and ethics. This case study, part of Skilled MBA's Business Ethics series, emphasizes the importance of ethical decision-making in global business strategies, particularly in navigating complex geopolitical landscapes. Thank you for exploring global business ethics with Skilled MBA. Email, support@skilledmba.com, mobile, +91 87553 00795, website, www.skilledmba.com.